All right, good evening, everyone. Thank you for joining us today for our webinar, Budgeting for Financial Success. If you have not been on one of my webinars, my name is Katie Gascoigne, and I am an outreach coordinator with the Human Services Center Mon Valley, and we're doing this as part of our financial literacy program. So a lot of what I'm going to reference tonight comes from the Consumer Financial Protection Bureau. This is a government agency that exists to help you with your finances, protect you from predatory corporations that do shady things. So I'm going to reference worksheets this evening. You'll have access to all of those worksheets and a link how to find more information from the CFPB. So, our successful money management and how to be good with budgeting has four components we're going to look at tonight: setting goals, checking our income and our expenses, and then we'll also talk about savings. These are interconnected, so when you make a change in one, it's going to impact the others as well. And if you feel pretty good about one of those areas, that's great. And then you would just have to look at focusing on the other three areas to build yourself up there. And if you're falling behind in one area, it doesn't mean that you need to throw your entire budget out the window. We'll talk about ways you can readjust things as you go. So our first one up is setting goals. So setting goals can help you accomplish your dreams, and they're going to be different for everyone. You need to think about what you value most and what is important in your life at this moment. And obviously, this is related to our finances. So, something that you value might be different than a family member or a friend or anyone else on this webinar call. And that's fine because this is your finances that we are talking about. So, an example could be if you value supporting your family, your goal might be to start a 529 savings account for a kid in your family, whether that's your kid, you've got a niece or a nephew or a grandkid, because those savings accounts can help that child earn an education in the future, and you value supporting your family in that way. But for someone who doesn't have any kids in their life, that's obviously not going to be something that they value and set up a goal towards. So maybe their value instead is having time to relax, and they want to set a goal towards making sure they have time for a vacation and money to pay for that vacation. So it's okay that our goals are different. And there are short term and long term goals. So, short term goals are things we can maybe achieve in 6 months, and our longer term goals are maybe retirement. That's going to be a couple decades until you get there. And you will want to have both types of goals because it's great to have things you can achieve more quickly that are shorter term, or something, an event that's coming up, later this year versus I would love to retire when I'm in my 60s. So I've got a couple decades still to plan for that one. And I need to be setting up goals to make sure that I can do that when I hit my 60s. The goals exist to help you make a plan, but they're also flexible. So don't feel that just because you've set a goal for yourself, you can never change it. And we will also talk about that as well. So when we're setting our goals, you've probably heard of SMART goals before, but if you weren't sure what that is, here's a great explanation for you. So you want your goals to be specific. What is the very specific thing that you are trying to achieve related to your finances? The M stands for measurable. How will you know that you have achieved this goal for yourself? And then achievable means, is it in your power to accomplish it? You don't want to set some massive goal that you know you're never going to achieve, because that can kind of be deflating when you haven't achieved it then. But there are going to be lots of great goals that you can achieve and are within your power. So we can set small goals that lead up to something bigger. And then, is it relevant to you? Is it relevant to your goals? Is it relevant to what you value in life? If you don't value having a vacation, you obviously wouldn't want to set a goal related to a vacation because there's something else that you value more. And then time bound. When would you like to accomplish this thing? And putting a time frame on it is also really great to making sure that we achieve it. And you can set goals for all sorts of things. If you're about to get married, maybe it's paying for a wedding, paying for education, whether you're going to college the first time, or maybe you want a new training to get a better job, or you're saving for your kids' college. It could be paying down debt. Could be buying a new car, buying a house for yourself, saving an emergency fund. There are all sorts of things that you can set goals for that can be related to your finances. And having it broken out into these parts it'll make it easier for you to understand what you want to work towards. and then also know how you've achieved it because we're going to measure our things. So, an example of this, if you just say, I want to pay my debt, it's not very specific. It's kind of this amorphous blob. You know, you have some debt out there, but you're not sure how you're going to tackle it. So, just saying my goal is to pay my debt is not specific enough to really make an impact in our budget. So, how else we can look at that is by saying, I want to pay $600 of credit card debt. Very specific. You are talking about your credit card debt and you have a specific amount that you are going to pay. How are you going to measure this? You've decided that you're going to work on this for a couple months, so you are going to pay at least $100 every month. That will be measurable. You either have paid $100 or not by the end of the month. Is it achievable? Yes, you have determined that you are able to pay $600 towards this debt. It's well within your means to do that. Is it relevant to you? If you've decided paying down debt is a value of yours, then obviously this would be relevant because you value getting rid of this debt out of your life. And then the time bound part of it, you are going to pay this in the next 6 months. So again, it will be very easy to know if you have achieved it because after 6 months, we've either paid down our $600 or not. So that's how you set up something that's kind of wishy-washy of like, I'm gonna pay my debt. We don't want that. We want something that's a SMART goal that says $600, the specific type, credit card debt, how much you're gonna pay every month. You could do this every week if you wanted to, but this is just easier to talk about, $100 every month for the next 6 months. It's relevant to you and you feel that you can achieve that. So as you're thinking about how to set goals for your finances, it's great to break your goal into smaller actionable steps. So we talked about just $600 of credit card debt. You might have more than that. That happens sometimes. So if you can break it into smaller chunks that you can look at, it'll feel easier for you to tackle that. Consider what resources you might need. Knowing that you need more money is always a resource that we hear about when we do this presentation. So obviously you would need some money to pay for things or to save for things, but also consider other resources. If your goal is to buy a house by a certain deadline, maybe the resource that you want to build for yourself is also knowing how to do some DIY projects. If you know that you want to repaint whatever new house you buy for yourself, maybe learn how to paint walls inside your house or do some easy house repairs. Those are some different types of resources that once you've achieved your goal, will help build up that goal, the thing that you've achieved to make it sustainable. Definitely set a deadline for yourself. It is easier to know if you have hit your target if you've said you want to do something by a specific deadline. And think about sharing progress with a friend. Someone who they don't need to know all of your ins and outs of your finances, but someone who will support you on your journey. They will hold you accountable. So if you tell them, I really want to tackle my debt and pay this down, then if every time you guys get together, you're going out for coffee or going out to eat, they can help you and say, hey, maybe we don't need to go and pay for coffee this time. I'd rather see you put that $5 towards your savings plan or towards that debt that you said that was important to you and that you wanted to pay down. They will help hold you accountable. So it's always great to set yourself a deadline and then find a friend who will help you stay on track with that. I mentioned this earlier, it's definitely okay to revise these goals for yourself. Even if you're writing it down, just because you did that, it doesn't mean it's set in stone. They're a plan to help you reach what you want to achieve, but that plan is able to change. Sometimes you're halfway towards your goal and you realize, I don't actually value this thing anymore. Don't keep saving money towards something that you don't value anymore or isn't as important to you as something else that has come up. Maybe you set yourself 6 months to do something and you got it done in 4. That's always great. But then you've got 2 months that you can shift and create a new goal for yourself. Or maybe you need more time than the 6 months that you set. That's okay. It doesn't mean you failed if you didn't get it in 6 months. But reevaluate, do you need to extend your time because you can't put as much money towards something? That's okay. Revise that SMART goal so that you can stay on track for the rest of the time. Sometimes it's, I want to save money for an emergency fund. Well, then what do you do once you do that? You've been really good at saving money for one thing. Maybe you can look at starting a goal to save money for something else. So first, we're obviously going to think about what goals we want for our money, and then we need to know what income we have. What money do we have to play with? There are different types of income you can think about when you're thinking about income for your budget. If you've got a job, it might be irregular wages. Maybe you're lucky enough to work somewhere where you get a bonus. Or if you're currently unemployed, maybe you're getting unemployment compensation was related to the fact that you had a job. You might also have benefits. So you could be getting Social Security. You could be getting public benefits, like maybe someone's helping to pay your heat right now with LIHEAP, or you're getting some food stamps or something like that. Someone's helping pay for your childcare. Other types of things, if you're retired, you could be getting your IRA retirement. Maybe you're lucky enough to have a pension. People can gift you money, which is always great when you get that. Think about the timing of when you receive these things. So, regular timing might be you work a job and you know you get paid the same amount every 2 weeks. It's very regular, same amount on a regular basis. An irregular version of that, you might get paid every 2 weeks, so the timing is the same, but the amount changes. Maybe you are a server in a restaurant and it can fluctuate depending on how generous people feel with their tips. So you know you have income coming every 2 weeks, but not necessarily how much you're going to get each time. And seasonal income might be you take a job at Walmart during Christmas just because you want to earn some extra money, but you don't do it the rest of the year. So that timing, you've only got it for a month or two around Christmas. Or maybe it's getting gifts seasonally, whether it's around a winter holiday or if your birthday's in the spring, you know, you always get a boost in the spring at that time. Another sort of seasonal thing is your tax refund, since we're still in tax season. You know, it comes at some point in the spring once you have made sure to file your taxes. But again, that is an amount of money that tends to change every year. So the timing might be seasonal, the amount is irregular there. And as you're looking at your income, one thing to note about public benefits, they're not always flexible. I'm sure you're all aware of that. So SNAP is going to provide you money to buy food, but you can't then take that money and go buy shoes or something. Or a senior food box is going to provide you food, but those are the goods you've actually received. You're not getting cash instead to go buy food or buy something else. And even though those benefits aren't always flexible, they can still help your budget. And so it's still worth thinking about having them as part of your budget, or definitely think about applying for them if you aren't currently getting them but would qualify. Even if you have applied to public benefits in the past and not received them, if circumstances have changed, definitely apply and see if you qualify now. If you're making a lot less money, it is worth looking at. If you've got new people in your household, also worth looking at. Whether you've got a new baby, you know, it increases the number in your household and you might qualify. Or if you've got a spouse who's moved in recently, if you've merged some families, if your parent moved out of their house and now lives with you and they're part of your family budget, like you have extra bodies in your household, so you might qualify for those benefits all of a sudden. Always worth reapplying for. A lot of things changed their eligibility since the pandemic. So if it's been a couple years, it might be worth relooking at that. One that's a great example, if you are a senior, the property tax and rent rebate program drastically changed the eligibility levels for this year. It's now up to $45,000 per household for your eligibility income. It was a lot lower if you were a renter last year. So if you didn't qualify for that in the past, you might qualify now, and the amount of money they give you also increased. So always worth looking at. Another thing to think of for this income, look at your paycheck. What is coming out of your paycheck on a regular basis? If you are contributing to something like an FSA or HSA, so those are flexible spending accounts, health savings accounts, if you're putting money into that and then not using that money to pay for medical expenses, you're kind of giving away some of your money that is going somewhere and you're not getting a benefit from it. So either make use of that, you know, HSA account that you're paying into, or maybe consider stopping putting money in that program, because you would get the money in your paycheck then and it wouldn't be sitting in some account that you're not making use of. And if you would like to be increasing your income, a few ways you can think about that. Potentially work more hours if you're not working full time or you're like Maybe you're a barista and you want to pick up an extra shift or two. That can always help to increase income. They say the easiest way to get more income is to actually ask your employer for promotions or raising your salary or wages. But also, if you know you're not being paid well, feel free to find a job that is going to pay you what you are worth for the type of work that you are doing. You can always get workforce training to get a better type of job or a different type of job if that will pay you any better. And if you're getting towards the age where you're lucky enough to retire and not have to work anymore, if you wait to claim your Social Security, so like let's say you're 63, you have an option to take it this year, or you could take it next year at 64. If you wait a year or two, you'll actually get more each month out of Social Security if you are able to wait. I know some people need to retire immediately, so it's not an option. That's something to think about if you're getting towards your retirement age. So this will be one of the resources that you'll have access to in that email that I send next week. It is a worksheet that the CFPB put together to help you track your income and your benefits. And what you'll do when you get this worksheet is track for a month or two by week what type of income you're getting and how much you're getting. You can print these worksheets off, or if you do it on your computer, you can actually type in there and it will do the math for you, which is really fantastic. But it's great to look at your income by week because you might be getting a bunch at the beginning of the month, but not later, or you'll want this for another worksheet that we talk about later to compare when your income is coming in versus when your expenses are going out. And you'll see there are some benefit programs on here like SNAP or TANF. There is also spots to put what type of jobs you're working, other government programs you might getting, or just an other, maybe you got a gift that week, which is great. And when you're doing this, you will want to use your net income, which is a phrase that just means what actually hit your bank account after your job took out your taxes. So our next part we're going to look at is expenses. Now that we have thought about where all of our money is coming in from, the harder part is to look at where it's going out to. Are going to want to spend a month or two looking at what bills are coming in and make yourself familiar with them, and not just immediately set up your budget, because you kind of need to have a grasp on what sorts of things you're paying. If you've never done a budget, you will want to have a grasp on what sorts of things you're paying and how much they cost so that you can plan how much money to be putting towards them. So we're going to talk about tracking your spending for a full month before we're talking about limiting that spending, basically. And as you are thinking about the things that you're paying money for, you will want to think if they are a need, an obligation, or a want. So, needs are things you definitely have to survive. You need a place to live, you have to feed yourself. If you are on a medication, you need to keep continuing that medication. And if you're a person who is out working, you need reliable transportation to get to somewhere where you are working. Reliable transportation does not always mean a new car. It might mean a used car that works great, or it might mean it taking the bus until you're able to afford a car for yourself. Obligations are things you may not want to pay, but you are legally obligated to pay. So it could include child support or spousal support. It also includes paying off debts that you have in your name. Again, it's tax time. If you have a tax bill you owe the IRS, you are obligated to pay that. So we don't always want to, but we have to. It might track you down later in life if you didn't take care of paying it when you needed to. And then wants are things that we don't need, and they are often the easiest place to cut when we're looking at building our budget. While you definitely need food to eat, you don't always need name brand food, or you don't always have to go out to a restaurant to feed yourself. You may want a newer TV because yours is getting a little rickety there. But if your old TV still works, if you can even delay buying that new TV for a little bit, it can help you stabilize the other parts of your budget. You'll see I've got reliable transportation in the need side and the new car on the want side. They could be similar, but it's not the same. You need to be able to reliably get somewhere, but that doesn't mean that it's going to be a new car. And sometimes this is hard if you've got kids. They don't always understand the difference between needs and wants, and they may not always understand why you need to cut things that are wants, like a video game system, out of the budget. It is fun to teach kids about money. I do it at my job with our after school program and our summer camp. And CFPB also has great resources for that if you've got kiddos that you're trying to teach them about money. But if you can start with them, even with smaller amounts of money, like talking about here is your little bit of allowance, that's your income coming in. How are you going to spend that on what you need or what you want in their own little budget system? And if they can understand those little things, they're sometimes also okay waiting for something like a video game system. Or maybe it is borrowing something from the library instead of buying it new for yourself or for your kiddos. So as you're thinking about those expenses you're going to track, here are some examples. You may not have all of this. Like I don't have a mortgage, but I do have rent. So if you don't have something, that's fine. Obviously, don't track something you don't have, but you'll want to think, how are you paying for your housing, your rent or your mortgage? If you don't have either, congratulations. It's nice to have free housing. If you are paying utilities, you might have gas or electric, water or sewer, trash, phone and internet. I put internet under utilities because I think more and more it's becoming more necessary to have in our homes. If your kids, kids don't get snow days anymore and they often have learn from home days, which means you're going to have internet at your house. Or if you have a job that allows work from home, you need access to the internet to do that. What streaming or cable services are you paying for? Are you paying for multiple streaming services that maybe you forgot about? Try to think about all those places you're paying for money. Food, which can be going out to restaurants food or your groceries, clothing, everything that could be related to transportation, whether you are doing bus passes, ride shares, or you have a vehicle that you are paying for maintenance and gas on that. Things like childcare, debt repayments, even gifts for birthdays and holidays, but also gifts to charities. Like these are all expenses that are coming out of your budget. Look for hidden fees for things. Like I said, if you are paying your car insurance and you're paying it monthly, you might actually be paying more and paying a fee for the ability to pay it monthly versus if you could save and do like pay for 6 months at a time. So when you get your bills, try to read if there are any hidden fees in there that you weren't sure about. If you're looking at your budget, think if there are any unnecessary expenses that you can cut, even if you're just cutting them temporarily. If you really love all of your 14 different streaming services, congratulations, but I guarantee you can't watch 14 different things at once. So do you consider cutting some of those, even just for a month or two, because you're not watching something at the current moment, and then you can pick it back up at a later time. And again, with our expenses, we've looked at the different types, but there is also the regular, irregular, and seasonal expenses as well. So regular things are you're always paying these expenses. You always have that rent or mortgage monthly. You've always got your utility bills monthly. Even if you pay something every 6 months, that is a regular thing is happening every 6 months. My car insurance, I got to pay it this month and I will have to pay it again in 6 more. So I know that that is coming and I can plan for that. Irregular expenses are sometimes harder to plan for. These are the unexpected things. No one plans to break their tooth and have to go to the dentist and get that fixed, or no one plans for their pet to get sick and you have to go to the vet. And this is where our savings part will come in handy in a moment. So you'll want to think, what are some irregular things that might pop up? Or as you're doing this for a month or two, does something suddenly surprise you? And how can we plan for that? And then again, seasonal expenses fall at different times. Obviously, holiday presents happen at holiday times. I've got a lot of family members with spring birthdays, so I know all of their gifts fall into my spring part of my budget. I can plan for them because obviously birthdays fall at the same time every year, but I'm not having birthdays every month that I have to buy something for. Or maybe your vacation only happens every July. It's a seasonal type of thing. This is another worksheet that you'll have access to, and you'll see down the left side, we've got, again, different types of expenses that you might be paying for during a month, and the ability to track that by week, how much you're spending. Again, you can print this and fill it in with pencil or pen, or if you do it on your computer, it will add things for you, which is fantastic. There is an other line, so if you've got something that isn't appearing already on this, there is the ability to write in whatever expense that you're paying. And then if you don't pay for something, cross it off and put something that you are paying there. I don't pay for childcare, so I would cross off the education and childcare line and I might fill in the hobbies that I spend all of my money on. Do it for a month or two for yourself. Just try to track where that money is going and at what point during the month you are spending money on things. You can also use different apps to do the same sort of thing connected to your credit card or your bank account, and it analyzes all of those transactions for you and it will put money into different categories, which is great. But I think if you can try to do this for yourself, you'll have a better grasp really on where that money is going. And then the other thing you can do is track due dates for your bills on a bill calendar. This again, a worksheet you'll have access to. You'll fill it in by month and list all of those regular types of bills that you have and when you have to pay them. And the way that you should put them on the calendar is to think about how do you pay them. If you pay things online, don't list it on the day the bill is actually due. List it 2 days beforehand because you want to make sure to pay it 2 days beforehand. All the banks have time to process the payment coming out of your account and going into the agency that you're paying so that that money is received by them on that due date. Or if you mail in payments, you would want to put it a week before a payment is due so that, again, there's time for that check to get to them through the mail, get processed by the date that it is actually due. And it's also fun to put your paydays on here so you can see where that is falling in relation to when you have to pay things. So this is an example actually of my bill calendar for April. And I've got a lot of things on here that I pay. And these dates that you see are the dates that I do like everything online. That's just what works for me. If you like checks, that's fantastic. Yours would be slightly different. But the date that these are listed are the day that I pay something online and its actual due date is a couple days later. So you see on the second, I have to pay my water bill. I put Netflix on here. That's an automated payment that is coming out. So that water is actually going to be due on the 4th, but I'm paying it on the 2nd to make sure it processes on time. I've got a credit card that I'm paying on the 6th, and I've got another one that I'm paying on the 8th. You'll see other utilities on here when I have to make sure to pay internet or electric. Even my cell phone bill is on there. I said this is the month I gotta go and pay that car insurance. So you'll see car insurance is on there. And unfortunately, my car registration happens at the same time. So down on the 28th, I have to pay that car registration before it expires on the 30th. You would obviously make a new bill calendar for yourself based on each month, change the little numbers of where they fall on the days of the week, and change where things go. You'll see I have rent at the very bottom on the 28th, not on the 1st. While my rent is due on the 1st, I want to make sure that I have paid it early so that I know it has processed by the time it is actually due on the 1st then. So this is nice because it gives you another view where you can see when things are falling during the month. And then you'll notice I have a whole week, the 14th through the 20th, where I don't have to pay any bills, which is great. It's nice to not have to pay bills for a few days. However, I've got a lot of stuff the week before and a lot of stuff the week after. If you would do this for yourself and notice you've got a week where you don't have anything, but then you've got a ton of stuff that you owe for the next week, you can pay something even earlier than the 2 days before it is due. If that helps you pace out when money is leaving your bank account, it might make you feel better about how things are going. I know that sounds weird to say, but you won't have a whole bunch of stuff happening at once because I know some people get very anxious about money. So if you can spread out when things are leaving your account, it won't feel like you're taking as big of a hit when it's all coming during one week. I've also got my two pay times for April listed on there on the 12th and the 26th. So something to also think about is when is my pay hitting my bank account versus when I have to be paying things. So obviously getting paid on the 12th, but having multiple things that I had to pay before that, you got to make sure you have some money left over from the month beforehand to pay for those things until I would get to the 12th. That can help pay that cell phone, electric bill, my car insurance, and other things until I get paid again later in the month, which then helps pay for my rent at the end. So if you've never looked at your bills like this, it might be an eye-opening experience to see when your money needs to be coming in and out of your account. If you're looking at this right now and you're like, I really don't like looking at it on this calendar monthly view, I just want to look at it. I liked those other worksheets that I saw week 1, 2, 3, 4, 5. You will use the worksheet that works for you. It's a lot to think about with our expenses, but we also want to try to think about our savings as we're building our budget. So what do we want to look at for that? Any money that you can save now for an unexpected expense or an emergency is going to save you money later. So, things that you can think about saving money for is an emergency fund, which I am a huge proponent of this. If you don't have one yet, I could have like a whole 2 hour conversation with you about having an emergency fund. They're very useful to have. It's great to dip into that when an emergency comes up instead of having to put like a whole medical bill on a credit card or something. So you could save money for an emergency fund. You might be saving for education. Anything like if you know you're going to have to get a graduate degree to advance in your career, anything you can save now for paying that tuition means you get to take less student loans and have less really expensive payments you have to give to someone later. You can save for the purchase of a home or a car, or even saving money for if you would have a home repair or a car repair bill. It is never fun to have to spend several $100s even just to get new tires on your car. But if you have saved some money to put towards that, less that has to go on your credit card. You can save for irregular bills. You saw my example on my calendar. I have to pay my car registration. That is a once a year thing. It's not a ton of money, but it's a different expense that's going to be happening in my budget that month. So I have saved money to be able to pay for that. And I've saved a little bit every month throughout the year so that when that expense hits, it doesn't completely blow out my budget for that month. You can save for gifts. So there are sometimes a lot of people to buy gifts for around the winter holidays. Anything that you've been able to save towards that means less that you suddenly have to come up with in December. And I mentioned this earlier, saving for retirement. Again, anything you can save means you get to have a more pleasant and enjoyable retirement. When you're looking at doing things like saving towards the purchase of a home, there are some programs out there. And I'm just going to plug our next webinar in April because Mon Valley Initiative is going to talk all about home ownership. So you'll hear a whole hour of that if you're interested. But just a quick thing. Some programs will say if you save $1, I will give you an extra $3 to put towards your house down payment. So anything you can save towards that, and someone's going to match your money and then give you extra. It's great when you've had a little bit saved so you can participate in a program like that. And then if you are working at a W-2 type of job, your employer might have a retirement account set up for you already. And again, that is a place where you might be able to put some money in and get a match out of them. So it's not just you saving for retirement, which is a good move to do, but you can also get more money out of your company by having them match however much money you're putting into that account. So how can you save more money? The easy answer, but not easy answer, is to say decrease your expenses. If you can cut anything out of your budget, even just a little bit, like I said, cut a streaming service for a month or two, it means you've got a little bit of money that you can put towards something else. That might be cutting a lot of expenses that are wants right now, just so that you can build an emergency savings fund for yourself. And then once you hit whatever number you want to put on that, once you hit that, you can go back to putting those wants back into your budget because you've decided your value is to have a little bit of an emergency fund. You set a goal for yourself, you hit it, and then you can readjust your budget back to something else. Step 2, looking at extra paychecks. If you are paid consistently every 2 weeks, there's going to be 2 months during the year where you actually get 3 paychecks. And I know this because my company, we get paid 3 times in March. We got paid on the 1st, the 15th, and then we're getting paid tomorrow as well. So if you're paid that every other week, there is going to be some month during the year where you've got 3 paychecks coming in. So if you have set up your budget to only survive, or survive sounds bad, but if you have set up your budget to only need 2 paychecks every month, then when you get a third extra one, it is a large chunk of money at once that you can put towards a goal. So I'm going to use some very just easy to round numbers. If you get paid $1,000 in a paycheck, you normally have $2,000 in the month, which means your budget should not exceed $2,000. So if you know all of your things you have to pay for, all of your housing needs, food needs, medical costs, all of those things, if you can pay for all of that with $2,000 or less, then when that third one hits, you've got an extra $1,000 that you can do something with. You could put a giant payment towards a debt. You could put a giant amount of money in a savings account or a retirement account to save for something that is important to you. And that should happen twice a year. So like for my company, this is happening in March, and I think the next time it happens is in August. Depending when your company paid you the first time in January, it shifts when that happens. But that's kind of a nice little, it seems like a bonus for yourself if you've never thought of it that way. Take a look at when you get paid. You might be surprised that it feels like you suddenly have free money. Another way to save more is look at automatic savings and using direct deposit. So for automatic savings, some banks will analyze how much money comes in and out of your bank account at various times, and they use AI and computer learning to figure out, hey, we can transfer little bits from your checking account into your savings account on your behalf. And then this is great because you don't forget to move the money yourself. They do it for you, and they have done it at a time where it doesn't impact when money is otherwise going out of your account because they have analyzed everything over a couple months. So it automates it for you, which is really fantastic. You can also automate savings by specifically telling your bank to say every first of the month, I want you to move $50 from my checking into my savings. And they will do that until you tell them to stop. And again, that's great. If you can automate it, you won't forget to move that money yourself. And then for direct deposit, check with your employer. Some of them will let you split where your pay stub gets paid into. Ask them if they can put a certain amount or maybe a percentage of every paycheck into a separate account. Hopefully into a savings account because that's how we earn money with interest. Or you could put it into a separate checking account that maybe you only touch in certain situations. But if you have the ability, ask your boss or ask your HR, hey, can I split my paycheck into two accounts? Because that's great. And again, it happens every time you're paid and you won't be forgetting to move the money manually yourself. You can also do that with your tax refund. If you haven't filed taxes yet, you still have a couple weeks to do that, but you can split where that tax refund is deposited into. So again, you can put a large chunk of it into your savings. If you have a plan for most of that money and you need to use it right away, you can do that. But you can also split and put some of it into a savings account. Or you can even buy savings bonds with it, which is really great. And then where should you be keeping your savings? Savings jar and envelope, if you use cash a lot, that's a great place to start. If you can actually put it in a contained spot with the rest of the money that you're trying to save, or use an envelope method where one maybe says vacation and another thing says paying for the kids' uniforms that I need to buy in the August and putting money into that. You can even write amounts on those envelopes of, I want to save $200 for my uniforms, and you can keep track of what you're putting into there. Prepaid cards, if you're unaware, are things where need something like $500 to get it started, but you put $500 on that card and then you keep it maybe just for an emergency. So when you've got that medical bill you have to pay, you know you've got a card with $500 that you can swipe and be good. Savings account obviously is great because we can earn interest on them, especially if you find a high yield savings account right now, which a lot of online only banks do. You get paid for having your money in an account, which is great. College 529 accounts are good to help save money in it has some tax incentives to save money there for yourself if you're going to go to school, or little kids for when they turn 18, they'll have money ready to go for their education. If you're saving for retirement, definitely think about putting it in something like a 401k or 403b if you work at a nonprofit, or an IRA account, because it lets you invest the money. It grows a little better than just being in a regular savings account. Obviously, you have to be okay with the risks of investing your money, but it is worth looking into because you can grow your retirement a bit bigger. And then savings bonds are great if you want to gift a kid in your family $25, and then by 18, by the time they're turning into an adult, it has grown into something larger. But savings bonds, you can actually still buy them. They don't always come on paper now. They're just electronic, I think, but they do still exist. We've talked about lots of different parts. It comes together in what is called a cash flow plan. You'll see how your money flows in and out and identify maybe where you're falling short in a week. And it will help you get back on track with balancing your income and expenses. And of course, we've got another worksheet from our friends at the CFPB. And again, if you type in, it will do the math for you, which is great. But in week one, you would list all of that money that you have, tracked on your other spreadsheets, what type of money is coming in and how much is coming in, and subtract your weekly expenses. So we had our two worksheets that went week 1 through 5. What was the income? What was the expenses? This is how it comes together. As you type things in, like I said, it will do math. So this example, we started with $250. We had some income to get to a total income of $650, and then we had several expenses that when we subtracted it, our ending weekly balance was $400. The worksheet, if you're doing it on your computer, will pop that 400 back to the top of week 2, and then you keep going through your weeks. And this is nice if you, again, are round numbers. If you know, oh, I get $2,000 in a month, but I'm somehow coming up short all the time. This, or coming up short at different points during the month, this will help you figure out, well, you've got like $800 in expenses in the first 2 weeks when you haven't gotten $800 to actually spend on something. And it allows you to see when things are coming in and out a little easier. And you can ask people who are sending you bills if they can change bill due dates so that it is coming at a time when you actually have money during the month to pay for that. So how can we improve that cash flow? Like I just mentioned, change your billing due date to after you have received income to pay for something. Or if got your tax refund, maybe set yourself up that you can have some money set aside for when you know bills are going to come in before you have gotten maybe a paycheck to come in, and then you're not sort of putting yourself into the red unnecessarily. If you can't pay like your car insurance 6 months at a time, you can pay it in a smaller monthly payment. Less money that you have to come up with at once, but you might be paying a small fee on top of that. So in the end, after 6 months, you have paid more. But if you can't pay that big bill every 6 months, maybe do it on a monthly instead. Definitely think about applying for public benefits if you qualify for something. I know some people are hesitant to do this. We would rather have you get that benefit and have you balance out your budget because of that assistance than be struggling when you don't need to be struggling. And for most public benefits, you're not going to prevent someone else from getting assistance just because you get it. Also, there's enough food stamp money to go around for everyone's needs. Review your income tax withholding. If you are having a ton of money, and this is a personal preference thing, you might be having a ton of money withheld during the year, and it's going to give you a bigger refund when you file your taxes. And maybe you love having that big refund amount, but what you've done to yourself is you've given yourself less money to have every month throughout the year instead. So maybe you adjust your income tax withholding. You'll get more of your money during the year when you actually need it to be paying your bills. Your tax refund is going to be a little smaller, but you have had that money every month to be balancing your budget instead of waiting for one time in the year for it to hit your account. And you can talk to HR if you've got a job, talk to them about how things are being withheld. Or if you're getting a pension and you're having taxes withheld and you don't need it to be withheld, you can talk to your retirement plan as well and get that adjusted. You can see if you qualify for income-based payment plans. This happens a lot with student loans. It can make your monthly payment a lot more manageable if you do that. And if you have the option to refinance something at a lower interest rate, take that opportunity. Interest rates are not going down right now, though. But if they do, think about that. You can sometimes refinance with a house mortgage, and it would make your monthly payment a little bit smaller if you are able to do that. Makes your monthly budget a little easier to handle. So we obviously need to think about, is there enough money to go around? If there's not enough money to go around to pay for all the things, our options are increasing our income or decreasing your expenses. So again, applying for benefits if we qualify for them to provide more funding in our budget. We might have to change our job or take on some additional work. And this does not have to be a forever thing. You might just take on a seasonal job to get some extra income to balance your budget and get yourself to what you consider a safe place. And then you can drop that seasonal job. You don't have to continuously do something just because you started it. Like I said, the data has shown that it's easier to get more money out of a current employer usually. So asking for a raise, additional hours, shifting to a different job position if it is going to pay you better and help you balance out that budget. Have a garage sale on here. A lot of Americans have a lot of things that we don't actually need in life. So maybe selling some of those things, it'll be a temporary boost to your budget, but maybe that helps you balance something and get onto better footing going forward then. Decreasing expenses, you'll see that apply for benefits is here as well. Some benefits provide you income to help pay for things, and some remove your need to pay for an expense. So, medical assistance is not giving you money to flush into your budget, but they will pay for your medical expenses. So, it's one thing you don't have to be paying out of your budget, if that makes sense. Like SNAP gives you money, well, SNAP gives you food money to pay for food, while something like medical assistance means you don't have to pay for an expense. Avoid unnecessary fees if you can pay something on time. If you can shift something in your budget to make sure you pay a specific bill on time and avoid a fee, it might be worth looking at doing that. Coupons and sales if you're shopping or shopping generic. I say this every time I talk about budgets. I will never buy generic Cheerios because they do not taste good to me. That is one thing I don't wiggle on in my budget, but I will use coupons and sales to buy everything else that's my food stuff so that I can save money there and make sure that I've got my tasty Cheerios. You will find what works for you. If you're going out to work every day, packing anything in your lunch instead of buying food out will save you some money. Energy conservation, we're coming out of winter right now, but setting your thermostat even just a couple of degrees lower, or when we get to the point of wanting air conditioning, keeping the temperature a couple of degrees higher means we don't need as much energy to heat or cool our space, and we'll save a little bit of money there. And then, because again, we're tax time and my agency does taxes, using a free tax preparation program, you can save a couple $100 by not paying someone to do your taxes, which is great. And agencies like mine that run a VITA free tax prep program, we really do try to make sure you have gotten all of those credits that you would qualify for, which means you get a bigger refund for yourself, which is fantastic. Again, you don't have to write down all of these websites. You will get a copy of it. But the Allegheny County Financial Empowerment Center, they are one of our best friends at our agency. They will sit down with you one-on-one, give you free financial counseling to look at your budget or look at whatever other financial questions you have. Their website is myfinancialpower.org. They're fantastic. I even use them. There is always something for someone to learn, but they will sit down with you and do that one-on-one. There are resources here if you are specifically looking for help with credit or debt that's appearing on your credit report. All of those CFPB worksheets that I talked about, you will get a link to a Google Drive where you can access them, but they also have a ton of other free stuff on there. Lots of options for free tax filing. Myfreetaxes.com, you can do that. File your taxes online yourself. Save yourself some money that way, or you can visit a VITA site and get assistance with that. So I just talked a whole lot. Let me close this down and let me start looking at your questions because I see there are a few things in my chat here. Oh yes, you will definitely, Phyllis, get a copy of the presentation. Everyone will get a copy of the presentation, slides, worksheets, all of that fun stuff. If you have questions, feel free to come off mute. We are being recorded in case you don't want your voice heard somewhere, or type things into the chat. I will pull up some of you submitted questions earlier on the RSVP form, so I might start with one of those while people are thinking about what they would like to ask. What is the best way to save if you have to spend the majority of your money on bills? We kind of talked about this a little bit. Look at what bills you are currently paying. Is there anything that is actually a want and not actually a need? That's an easy bill to cut out. Or you can look at shifting how you're paying for your bills. So cell phones can be really expensive. Cell phone bills can be really expensive, and there are always cheaper options out there. If you are paying for internet at your house, maybe finding a cheaper plan that is out there. Those are some easy ways to cut a little bit of money off your bill. You're obviously still paying a cell phone bill, but you're not paying as much. And then it gives you a little bit more wiggle room in your budget to be able to pay for something else. If we have some extra money, is it better to put it in savings or pay off debt faster? So this is going to go back to what do we value and what is our goal? If you hate having debt in your life, you may want to pay down that debt because you will feel better in the end knowing that you got rid of it quicker. Or if you don't have an emergency savings for yourself, maybe you will feel better putting that extra little bit every month towards an emergency savings plan so that if some catastrophe happens, you have some money to be able to pay it off. In Michaela, your case, it's non-interest earning debt. That's always fantastic because at least your debt isn't increasing every month with interest. So if you're okay just paying the required minimum payment on it, you might find that you're getting a bigger bang for your buck putting it into savings if you've got a high yield savings account. And if you're not familiar with what a high yield savings account is, like I have a credit union account that I think my interest is like a fraction of a percentage, but I also have a high yield savings account that is 4 point something percent. So if I'm going to put my money somewhere, I'm going to put it where I'm getting 4% of my money back because I get a ton more money there than something that's giving me less than 1%. And it's great because then you earn interest on top of your interest. So, Michaela, your specific case, obviously, we want to pay our minimum required payments every month so that our debt people don't come after us. But since that debt isn't earning any interest for you, you might feel better putting it into savings where you're going to earn some interest and then you can get more money in the end from it. Do other people have questions, though? Please feel free to ask them. But there are a lot of credit unions around. I know there's some in the Mon Valley where my agency is located. Some types of jobs have credit unions related to them. Like there's one for teachers in the Pittsburgh area. So you could look at something like that. And I'll say any bank or credit union that you pick to put your money in, make sure for banks that it's called, I think it's FDIC insured. It means your money is protected up to a certain amount in case something happens to the bank. And credit unions, I think it's called NCUA insured. Again, if something happens to the credit union, your money is still safe and you can get it back. Yvonne, your question about doing AFLAC or saving money for medical emergencies, this again is going to be what feels better to you. If I am correct in this, you pay into AFLAC and then AFLAC will pay you back for doing things like doctor appointments, or if you have a medical issue, help paying for hospitalization. If you are disciplined enough with your own money that you're regularly going to, like whatever you would spend on AFLAC, if you would put that into a savings account and earn interest on it, you might be able to pay for some of those medical expenses on your own. But if you feel more comfortable knowing that you have something to fall back on if a medical emergency happens, you can pay for AFLAC. That's fine. Also, just make sure that you understand if you have health insurance, what that can help pay for, because sometimes they duplicate and why pay for something twice if you don't need to. Are there typically minimum amounts to open a high yield savings account? Some of them, yes. And if you go, I think it's called bankrate.com. I'll try to put that in my email. It'll show you different rates of like, this bank will pay you this percent or whatever. And some of them list you don't need anything to open that account. Some of them list very specific, very high amounts of money to open the account because they're trying to attract higher earners. But a lot of them you can open with no money down kind of a thing and then just feed into it as you get money for yourself. Michaela, I don't know what Acorns is, if you want to let me know what that is to know if it's worthwhile. Oh, Michaela says she used to work for AFLAC and you can get a lot more out of it than what you pay if you would have an accident or a cancer. But she does not recommend their cancer or vision plans. So for someone who used to work for them, that's better information than I had, if that helps you figure out, Yvonne, if you want to pay into that. Okay, so Acorns is an app that tracks your spending. Whenever you make a purchase, it rounds up to a whole number and invests the change. Well, it sounds very interesting. I would say if you are comfortable with investing and you're comfortable with the risk that comes with investing, that could be good for you. You can get really big gains out of investing. You can also have big losses if the stock market takes a dump one day. It's nice that they do the rounding for you if you're okay knowing that, you know, if you knew you spent $12.50 at Target, it's gonna take that extra 50 cents and put it in there for you. So just know that you're gonna have a little bit less in your bank account than what you actually swiped on a card. If you're okay and you've got the money to float, if you would forget to keep track of it, that's fine. I would still probably check on the Acorns app on a monthly basis to know how much money it has taken and put into there. It's always good to have a grasp on where our money is going. It sounds very interesting, but again, if you're okay with doing the investing risk, it could be good. I know not everyone loves the idea of investing. Yeah, there are some bank accounts, Michaela, that will do that rounding up the change and putting it into savings for you. I feel like many years ago, PNC was one that did that, but I've not had my PNC account in quite a while, so don't fully go off that comment. There, there is an initiative called Bank on Greater Pittsburgh that has done some really great work evaluating different types of accounts from multiple different banks in the area. And I can throw the bank on information in my resources email, and they might have some information that helps you figure out if those accounts are ones that will help do the rounding with you.